Equivesto's due diligence process goes through a number of steps as we prepare a company to raise capital in the platform. So once a company starts working with us, the first thing that they do is fill out this long online form where we collect a lot of the basic information to get started. This allows us to verify that the company does exist. It lets us collect the articles of incorporation or any sort of documents that form the existence of the company. It also lets us collect things like the shareholders agreement or any company bylaws. We're able at this time to grab information on the founders and key management as well. So the first step we're doing is actually running background checks, ID verification on the businesses and the companies, including anti-money laundering checks, anti-terrorist financing checks, everything like that, to understand just the basics of who are the entities that we're dealing with. Once that's done, we move into actually collecting additional documents, as many documents as we can from the company that are directly related to their current capital raise and the business that they're operating. If they have a business plan, we want to collect that. We're collecting their pitch deck, financial projections, any agreements, legal agreements that would be directly relevant to the business. So, for example, if they have any IP licensing, if they have any large agreements with potential customers that they want to make reference to, if they have any critical agreements with other partner companies, or if there's more than one company that makes up the conglomerate that's raising capital, we collect all of those details. Next, we actually dive into the details of the legal documents themselves. We're going through the shareholders agreement and the articles of incorporation to see what are the different shares classes that currently exist in this company. How many shares are they allowed to issue for each of those share classes, and what are the rights of those share classes? We're also collecting the cap table and shareholders register to see who are the other current investors. Are there any investors who've invested before that haven't been properly papered, so their paperwork isn't completed and they're not properly listed? Is there any shareholders loans that are outstanding? Are there any loans or mortgages related to any of the property that the business has? If this is an operating manufacturing type business, we'll want to see if they have leases over any equipment or materials that they're using in their production process. After we've finished verifying these core details around the legal structure of the business, we then look at how that fits with their capital raising goals. If they're looking to do an equity crowdfunding round from the general public, it's likely that the legal structure they've set up, including the way the corporation is governed, the rights of the shareholders, and how shareholders are managed, is not typically structured to have potentially 1,000 new shareholders. Most companies are set up initially thinking there's going to be less than 10 people as shareholders. So that means there's an entire stage of this process where the company has to be adjusting their legal structure depending on the capital raise that they want to have. We also work with the company directly on right sizing their valuation. The company typically has a valuation that they would like to raise at, and we work with them to understand the thought behind that valuation, and then looking at the information they've provided, their financial projections, the market currently, the stage the company's at, and a number of other factors to provide our recommendation to them on a valuation, whether it's the same valuation that they initially came with or something slightly different. The valuation final decision is, of course, made by the company, but we want to make sure that the company has the best information possible so that when they approach the market, they're in a position to raise capital successfully. And any investor who participates in the raise feels like they're participating in a great opportunity at a fair price for their investment. We also look at the actual legal documents involved with making the investment next. So, does the company have a subscription agreement or will they need one? What different prospectus exemptions are they going to use? If the company is using the offering memorandum exemption or the equity crowdfunding exemption, there will need to be an offering document associated with this offering. For an offering memorandum, it's the offering memorandum itself. For equity crowdfunding, it would be the equity crowdfunding offering document. We spend a fair amount of time reviewing this critical document, which of course contains all the information an investor would want to know and review about investing into this company, including the risks associated with it, the use of the funds, and many more important details. So if the offering is open to the general public, I highly recommend you spend the time to review any offering document that's provided for the deal. We also go through the company's pitch deck, business plan, or any other marketing materials that they want to provide to investors. In those materials, anywhere the company is making statements about themselves, their success, their stage, or anything like that that needs to be verified, we then have to go and collect additional documentation to verify that information. If a company says, we've got 15 clients so far under contract and we're in the process of negotiating with 3 more, we'll need to collect documentary proof of all of those things. The idea is really, by the time you as an investor are arriving at an offering page on Equivesto, you know the information that you're reading has been confirmed by the platform so that you can then make decisions yourself about whether you feel this investment makes sense without having to worry about whether or not the information provided is true. Once those materials are verified and put together, we then actually start preparing the offering page itself for the investment. If the company also plans on releasing any social media posts, email blasts, or any related marketing, all of those materials need to be reviewed and approved by Equivesto in advance for compliance purposes.